Hello. How do we look? Did this work this time? Let's find out. I had the same problem as last week where I kept hitting the button and it wasn't going live. And then Aaron came to stare at it and then it worked because that's how tech support works. Um I am extremely nervous about this live stream because there is a reason that I haven't talked about crypto on the internet. I very much gloss over it when I bring it up. I have been working on a project that is going to be actually an edited video about the astrology to NFT pipeline, but that is not done because I am fact checking that times 10 because I'm worried about the crypto bros and bots. However, it was pointed out that right now, apparently Elon Musk is doing a live stream at the same time as me. Did he not know that this is my spot? About crypto. So the great news is that hopefully all of the people that might cause issues in the chat will be gone. We do have subscriber only mode on for the chat, so you have to be subscribed for, I believe, 5 minutes in order to comment in the chat, and that is just because I even when I'm not talking about something that has a lot of bots and bros in the space, I tend to have to deal with some drive-by spam commenting. So hopefully it'll be fine. It seems like a lot of folks are here. Maggie and DeWood says, we will support you. New Bold One says, deep breath in. You've got this. Thanks. David says, I'd rather listen to you than Elon Musk, if that helps. Thanks. I'm like, to me, that isn't like the highest form of compliment because I feel like a lot of people would rather listen to a lot of things. Like I would rather listen to like the sound of nails on a metal saw than listen to Elon Musk. But I'm really tempting the fates here by putting this stuff out on the internet. So Rural says, my students tell me their computers work if I glare at them. I spent 4 years working at a tech support desk at a college, and I gotta tell you, my specialty was law tech, but we did anything. And the number of people, so the way law tech works, if you don't know, it's a typesetting program, and it's kind of like if you combined like a super powerful, actually good Microsoft Word with like essentially like an HTML compiler. This is like a very rough description of what LaTeX is. And the thing about LaTeX is that you are essentially writing in code. When you are writing it, you're writing in a markup language, not really code, but in a markup language. And there's different packages that you have to install, and then you have to compile it when you actually want to get the printed out version. And there would be so many students that like were having failed compiling, and they would just like, it would fail like 10 times. And then they would just come to the desk and I would stand next to them, and then it would compile with making 0 changes by the virtue of me staring at it. So I felt like that was like my primary. Our tech support desk was open till midnight on weeknights, and I think that was largely so that students that were freaking out could just come over and just stand next to us while they did the exact same thing they were doing before. Kenneth says, I'm here to fight crypto bros. Great. I'm glad to hear it. David says, the people I train tell me things only work if I stand behind them and tell me to show me what they did. This is just how it works in all things, right? Yeah, it's not just you, David. It's whomever. Sometimes that's just like anybody working in tech support, but it doesn't always even have to be tech support. It just has to be someone else being around. Maggie and DeWood says, a few weeks ago, I called IT at work and ended up in a 20-minute long listening session on what a genius Mr. Musk is. I kept thinking, am I being pranked? Wow, I'm sorry for that. Rural asked, aren't all the crypto bros crying now? Well, that is actually what we are going to talk about today because there is a lot of interesting things. The reason I wanted to finally do this live stream, even though I've put off talking about crypto, particularly on YouTube. I feel like on the podcast, at least, like there's not a comment section. um, but I have put it off for a long time. But I think it's important to talk about because there is so much correction in the market right now, and there are a bunch of different elements of crypto-based assets that are worth discussing, and there are some particularly interesting things about it that tell us a lot about what is happening in other parts of the economy, because essentially the way that crypto now has transformed in the past year and a half, 2 years, is that crypto is largely when we're talking about the crypto economy, people think that we're still talking about dudes in basements. But in fact, the majority of crypto is actually traded by institutional investors at this point. 2/3 of crypto trades are actually institutional investors. And additionally, a lot of the investors that are doing crypto trades are institutional investors trading with one another, including very, very much, particularly China, and as we have reason to believe, North Korea government acting in China on behalf of the North Korean government. And this is like, I know this sounds like wild conspiracy theory things, but in fact, crypto being a relatively unregulated financial market, it is one that benefits but from two really key things. One, having a lot of available electricity and computing power. So, of course, we are seeing lots of places that are doing crypto mining located in places where electricity is cheap. So, we're seeing them kind of located in places where that is possible. And two, a financial instrument that is highly speculative, but what we have really seen in the past month is that crypto backed assets actually move in correlation with the market. So there's a term that you use to describe, that is as used to describe a stock's how it moves in accordance with the market, and it's called its beta. And if you have a beta of 1, that means that you would trade just the same as the market as a whole. So if the S&P 500, let's say the S&P 500 is actually only a collection of stocks, but let's say like the total market moves up by 10%. If you have a beta of 1, you will move exactly the same. If you have a high beta, that means you're going to be more volatile, but you'll be correlated with the stock market positively. So if you have a high beta, that means that you're more volatile and you'll move at a greater rate. So if you have a beta of 2 and the market goes up by 20%, then you will go up by 40%. The same, for a long time, a long time. Nothing is really a long time when we say a long time in crypto years, because crypto years are kind of like they're like dog years. in that, like, for each year that the regular market moves, we see the kind of volatility and changes in the makeup of the market and the movement of the market in crypto-based assets that reflects, I don't know, maybe 10 years of a regular market. It's very much an accelerated space because it's relatively new. And there has been a lot of people proclaiming that crypto is a great way to diversify your portfolio, because it is the future. It is an asset that you want to have in your portfolio. We see this with new financial instruments all the time. We saw it with, collateral debt obligations. We saw it, which is very much what led to the major financial crash. We saw it with, mortgage-backed securities. We see it with lots of different financial instruments, which are ways of packaging different financial instruments. It's ways of making derivative bets on the financial instruments. So for a long time, there was folks saying that crypto would move against the market. And one reason that people have said that is because, quite simply, so what are we all experiencing right now? What have I done 10 freaking live streams on at this point? Inflation, right? And we experience it. Inflation it affects our daily lives as people who need to buy food, who need to get places, who need to pay for housing. Inflation affects our daily lives in a way where the movement of the market may not. And which, I talked quite a lot about how the stock market is not the economy when we saw the stock market returning these crazy returns, while we were also seeing a lot of economic strife in the life of everyday folks. And I kept saying the stock market is not the economy. Well, now we are seeing a lot of inflation in the economy, and that in order to kind of curb inflation, they are raising interest rates, as I have talked about. And it's not just the US dollar that is, it's not just the Federal Reserve raising interest rates. Most currencies around the world are raising interest rates, except for the ones being run by corrupt or financially unsophisticated regimes. Like we're seeing Zimbabwe, which previously had hyperinflation, is now possibly they're now having very high rates of inflation. About 150% is what is happening now. And they literally deleted their currency a couple years ago to fix the hyperinflation. And because of corruption, it is now also experiencing very high inflation. It's not quite at hyperinflation levels yet, but it probably is. And then also Turkey is being run by an autocrat who refuses to raise interest rates and therefore is on track to experience hyperinflation. So the inflation is happening. And the argument was that crypto is a great way to diversify your portfolio for exactly the reason that crypto is a deflationary asset. And why is it deflationary? Well, okay, what makes inflation happen? It's when we issue more money, right? If there's more money in the economy, if the supply of money increases, then we get inflation. Because there are more dollars floating around. And that's why we raise interest rates, because it slows down the rate of lending, it lowers the money supply, and theoretically lowers inflation. If you have a deflationary currency like the Japanese yen or cryptocurrency, that means that you are essentially, if you cap the total amount of a currency available, then it will eventually be deflationary. And that is because you can't issue more supply. So cryptocurrencies are generally, there are lots of different ways that cryptocurrencies can be built, but almost all of them are issued with a cap. There is a fixed amount of total tokens or whatever it might be available for each type of currency that is made. And so by its nature, cryptocurrency is a deflationary asset. However, one, not all the Bitcoin has been sold. Right? Bitcoin, let's just say Bitcoin, right? Trading at 29,000 a Bitcoin ish right now. Bitcoin, not all the Bitcoin has been sold, and that is one of the most notable. It is the highest market cap of all of the cryptocurrencies. And it is important to understand, however, that cryptocurrencies, the actual currencies, are not all of crypto assets, because one, everybody wanted to say that they were on the blockchain or involved in crypto in some way. Everyone, all these enterprises, wanted to insert it as a buzzword to look like they were with the times over the past 4 to 10 years-ish. I saw ads at the gym when I was on the treadmill from Intel proclaiming how they were involved in blockchain. And we're not going to get too much into my criticisms of blockchain as an actual technology, but what is important to understand is that cryptocurrency by itself is not all of the crypto-based assets in the economy. most crypto-based assets are in fact derivatives, meaning they don't derive, their value is derived from a different thing than the underlying asset, right? So if you buy a stock and the stock price is theoretically derived from the value of the company underneath it, you are buying a piece of that company and it is derived from the value. However, if you buy a put or a call, if you buy a, a exchange traded note, you are buying a derivative, which means that it's not actually based on the value of that. It's based on a derivative of the value of it. It's not based on the underlying asset of the stock. It's based on, a type, a way that you feel about it. It's tangentially related, let's just say. I'm trying not to define it using the actual term, but it's kind of challenging. Derivative is actually a good description of what it is. And so what is important to understand is one of the reasons that we are seeing so many crypto-based assets in Freefall right now is because we had one really big thing happen, which was one of the stable coins became unpegged. And I'll get into what a stable coin is, but when that happened, it started to make institutional investors wary. And institutional investors, right now, we are seeing bear markets overall. We're probably heading into a recession generally. Particularly one of the things happened right here was that there on Thursday, Target and Walmart released their earnings, which were far below expectations. They essentially reported really dismal results, and they nosedived, and that kind of caused the entire market to nosedive. There was the biggest one-day drop in the market since 1987's Black Monday crash. And there is a phrase that we like to say, which is when assets are sold, all assets are sold, which essentially just means that the markets freak out, and when they decide it's time to sell, they sell all the things. However, there are some things that are more liquid than each other. So, one of the advantages of cryptocurrencies, especially held by and crypto-based assets, especially held by institutional investors, who once again make up 2/3 of the trades in crypto markets at this point, is that cryptocurrencies are super liquid. They don't have trading days. There is no opening and closing of the stock markets for cryptocurrencies. I mean, there are for the ones that are listed, but not the actual currencies themselves. So they are technically the most liquid. They can be released in the middle of the night, anywhere in the world. When you get a share of a mutual fund, for example, that transaction doesn't get settled until the end of the next business day. They only get traded once per day. Their NAV gets calculated once per day, and then from that comes their public offering price, which is what you pay for a share of a mutual fund. So, they only get once per day. Generally, the settlement date for a transaction happens plus 2 days, even though institutional investors primarily invest in what is called dark pools of money, which is one of the coolest phrases we can possibly use, which essentially just boils down to aftermarket off-record trading by institutional investors. And the reason they do this is because if they're doing large block trades, they don't want to move the market overall, nor do they necessarily want to expose what their trading methods are. So if they go kind of off record, then this means that people aren't going to be able to figure out exactly what their trading, what their investment philosophies are. Because when a large institutional investors are doing buy and sells, like, it can move the market as a whole. So they do these in these dark pools, which are after hours trading. All of this to say, institutional investors, remember, when assets sell, all assets sell. Well, how do institutional investors start selling? They sell from the most liquid, the thing they can liquidate first, to the thing they can liquidate last. right? There's plenty of things that they can't liquidate immediately. Like if they have long-term, highly illiquid debt, if they are invested in certain foreign markets, usually there's trading restrictions on those. There's, if they're in certain, if you're in a hedge fund, for example, if you're invested in a hedge fund, you actually need the general partner's permission in order to exit the fund. This isn't just a thing where you can go. It doesn't have high liquidity. What has high liquidity? Cryptocurrencies. So institutional investors decide they want to sell. What happens? We see huge corrections in the market. Also, remember how much some of these cryptocurrencies are trading at because they have a high beta. Well, that means that when we were riding high, we were experiencing record stock markets up. What was happening to cryptocurrencies? Well, we saw Bitcoin hit over $35,000 a share when, a couple years ago it was trading at, pennies on the dollar. Like 7 years ago, at 4 years ago, Bitcoin was trading at under $10,000 and 80% of the trading volume was being done by retail investors. Now, less than a third of the trading volume is by retail investors. So every time one Bitcoin gets sold, what happens to the market? That's a huge chunk of change. This is what we need to understand about this. One, anything that we are seeing in crypto-based assets is very much a reaction to the regular stock market. It points out the fundamental flaw in the argument that you should be invested in crypto because it is negatively correlated to the market overall. We have seen exactly the opposite of that. In fact, it is just a more volatile version of the market. That doesn't mean that it can't be an interesting method for diversifying your portfolio. Almost all recommendations are, one, they are highly speculative, they're very dangerous, and therefore less than 1% of your total portfolio should be invested in cryptocurrency. If you are invested in cryptocurrency and anything you put in, you should be prepared to lose entirely. But that being said, it doesn't say that they're not diversifying as far as the type of asset in them. But as far as being correlated negatively to other types of equity securities, other types of debt securities, no. In fact, they move exactly how the market does, just more. Okay, I went into a rant, so I have no idea what's happening in the chat. So let's go back and look at some of this. Nikki says, I'm here and it's my birthday. Well, welcome for me ranting about cryptocurrency for an hour and hopefully not getting taken over by crypto bros because they are distracted by Elon Musk. Kit says, to Kenna, if you're looking for crypto bros to fight, you're actually probably the only person here who'd be more successful in the Musk live stream. Yeah, that's true. Cheryl asks if we have a crypto donut tonight. No, but it is kind of like a mess of a donut, so maybe it is. It's a mess and no one really knows what's going on. It is a pineapple guava fritter. So it's got like a guava topping on it, and it's a fritter, but it has actual pieces of pineapple in it. I am pretty excited about this one, actually. It's not the prettiest, though. It's kind of like the crypto markets right now. Latitude says, I'm here and I don't immediately see a donut here. I'll put it there. It's in the background there. Rural says, giant facility mining crypto near me. It uses more power than the town it's in. Yeah, it's become quite common. Latitude says, I see the donut emergency over. The Journaling Broom says, it might be a good way to diversify if you know what you're doing. I started investing a bit over 4 years ago, and yeah, it's very, very volatile. Yeah, I think that there's once again, be prepared to lose everything you put in. It is highly volatile, and yes, it is a highly sophisticated financial instrument that for some reason is attracts people that are not necessarily financially sophisticated, because essentially a lot of this crypto things are just shy of gambling, and they tend to attract the exact same people that get pulled in for a lot of other financial scams. This isn't me generally shitting on everything that is to be cryptocurrency. I think that there are interesting financial applications of some of it, but there are also certain things that I think are just fundamentally real bad. And there are a lot of environmental impacts in finances, yeah. Aaron says, I converted $20 of Dogecoin to Bitcoin 10 years ago, and now it's worth $1,500, but I lost the key. I mean, isn't that everybody's? Well, Dogecoin had a big correction this week, so is it really worth $1,500? This is an interesting question. Latitude says, a fun fact about me is that I was an early adopter of Bitcoin, and I spent my 4 Bitcoin on like a humble bundle, a pizza, and sold the other 2 for like 400. Yeah, I got a Bitcoin in exchange for like, I got a couple Bitcoin in exchange for like a coffee in like 20, I want to say like 2013. And at that point, I don't know how much Bitcoin was trading for, but it was definitely not $29,000. And I lost the key, and that was before really wallets existed. So who knows? Who knows? Maggie says, the worst key to lose. Well, I will say I've had my fob key to my apartment stolen, and that is a guaranteed $100 I have to pay rather than the opportunity cost of the $100. So I don't know. I might, and you know, if you lose the key to like your fancy foreign car, it costs like you have to get a new transmission for some of those cars. So I honestly think the having to pay in order to function is worse than just losing a key of something that you have the lost opportunity cost. The Journaling Broom says, I heard there's only 10 weeks left of global wheat in storage. I saw a lot of articles about it today, apparently partially because of Russia, Ukraine, that produces 25% of global wheat. Yes, there is a lot of wheat things going on. I am not going to talk about this week, unfortunately, simply because there is a lot more reading to do. The UK should be the most worried is the rough answer that I need to give, which is a combination of Brexit and Russia, Ukraine. I think the important thing to remember when it comes to wheat, as we have talked about before, because I know, yes, most of the exports of wheat do come out of Russia and Ukraine. However, most countries actually produce majority of their wheat domestically. So there are things happening to wheat crops that are not just about the war, because the trade is only part of it, right? So there's the global commodity supply, but as far as actual supply chains that affect consumers, famine, heat waves, and bugs are actually more important to wheat right now than the war is to you if you are not in Russia or Ukraine. In 1987, we didn't know what would happen in the short term. Long term, it would either go back up or we'd have more important things to worry about. Yeah. Abel Jack says, another fun fact, the hashes need to mine a new Bitcoin are now so complex and fast that huge mining rigs are needed. Yeah, well, and, I am not going to get too deep into the technical side of cryptocurrency because there's a lot of better, smarter people than me that have done tons of deep dives on that. But the move to proof of work which is one of the ways of essentially mining. The move to proof of work has essentially made things so complicated and so expensive that it's allowed the mining operations to be even more and more consolidated in only a few power players. It used to be that if, you were willing to pay more for your electricity bill and could set up a computer in your closet in your apartment, you might be able to fundamentally, do some mining. Now the switch to proof of work in a lot of the crypto spaces and with a lot of the currencies means that we're now getting more and more narrow. So anyway, apparently there is a photo of baby me next to the New York Times with a headline about Black Monday. Oh, that's great to know. Abel Jack says, yeah, they're so big that they're adding a demonstrable amount of heat and carbon to the warming environment. Yeah, I mean, cryptocurrency, especially NFTs, are just an absolute disaster. Okay, people are a big fan of the donut. The donut is also hiding from the crypto bros. Yep. Asks what my favorite donut spot is out there in Portland. Almost definitely most of the weird donuts come from the vegan donut shop called Dough Donuts, which I highly recommend, which are like good if you want some like philosophically interesting donuts. I do think that they make some of the best donuts, but New Bold One says, I recently read that testosterone and cortisol can make people with an abundance of them take more financial risks, hence the volatility of the markets and the crypto bro phenomenon. That's an interesting theory. I feel like I have the anecdata to back that up, but I don't really know enough about but we do know that testosterone does make people take more risks. And cortisol obviously is like what happens when you get fight or flight responses. Interestingly enough, I had a roommate who did not produce adrenaline or cortisol naturally. I believe it's called Addison's disease. And he took more risks than anyone I have ever seen in my life and constantly terrified me because he would like ride a fixed gear bike with no brakes and no helmet all the time, flying through stop signs and stuff. And I was like, at one point I was just like, is this because you don't make, is this because of your synthetic adrenaline? Latitude says, I mined a Bitcoin on my EEPC, one of the first netbooks. It took a while though. Yeah. Which is like, imagine mining a Bitcoin on a netbook now. It's like, it's cute, but no. I do miss netbooks. They were pretty great. I had a friend who got a netbook when they were like just kind of becoming a thing for his biking across the US. And this is now that we have, you know, fancier, smarter computers that we can put in our pocket. Most people that do long distance biking across the US maybe take a tablet with them, which essentially functions as netbooks these days. But all right, we're getting very distracted here. So let's talk about the stablecoin collapse. So are we all kind of caught up on how essentially crypto, despite being everybody claiming that it is negatively correlated to the market by being a deflationary asset, it in fact seems to be moving just as though it has a high positive beta, which means it is more volatile than the market, but it moves along with the market. Very, very much a thing that we are seeing. So there's a bunch of reasons why we are seeing such massive corrections right now in the cryptocurrency space. One, as I mentioned, institutional investors make up a huge percentage of the overall investors in the crypto market now. And they can trade fast, and crypto has high liquidity. But even before we were starting to see a lot of stocks go bearish, we were seeing a bunch of different things happen in the crypto space, particularly because one of the stablecoins collapsed. So a stablecoin is meant to be a currency that maintains a peg, usually with something like $1, could be a euro, some sort of fiat currency generally. And the reason it maintains a peg is the idea that it can serve as a way to easily move between the cryptocurrency and the cryptocurrency markets and the regular markets, because one of the big problems right now with cryptocurrency is that there isn't that much stuff to spend on them. They are mainly to spend them on. They are predominantly a financial instrument. They are a speculative financial instrument. They are not really a currency in that majority of what people use them to trade for is in fact just other cryptocurrencies or other speculative financial instruments. So being able to convert them into dollars and being able to diversify your portfolio theoretically into one of this more speculative assets of cryptocurrency, but knowing that it's maintaining a stable peg. So what happened? Well, one of the stable coins collapsed. It lost 99% of its value. So some stable coins are usually backed by assets, and they're supposed to be backed by assets that are quite stable. So, it'd be highly rated corporate debentures, commercial paper, the, US treasuries, and actual dollars. And each stable coin kind of has a different way where it claims to maintain its peg. So the simplest and safest method is that you hold $1 in a bank account for every single one, or something in safe liquid assets like treasury bills, which are considered to be US treasury bills, which are considered to be the most liquid asset. And for every single stablecoin token. The token can essentially be traded freely by buyers and sellers, and when a seller wants to offload their stablecoin, they can either sell it on the open market or redeem it for its dollar value from the issuer. So this is what the USD coin uses. Terra USD is a different kind of coin. It is an algorithmic stablecoin where it tries to maintain the same value as the US dollar by using this complex kind of seesawing mechanism related to cryptocurrency. And the way that it worked was essentially if, the Terra coin could be exchanged for a Luna token. And, if at some point it kind of was below its peg, then, you'd see investors move from either the Luna token or to the dollar based on where it was. So, you could quickly make a couple cents on the dollar if it was kind of hovering above or below its peg. However, it went into a complete free fall because the algorithmic process meant to balance the price at close to $1. It triggered massive hyperinflation. So there went from being about 250 million of the total Luna tokens out to 6.3 billion or something like that over the course of just like a single day. And it went from a high of about $100 to less than a cent per Luna token. So Freefall, it lost almost all of its value. Its market cap went down by, I think, fucking 99% or something like that. And this is, so a bunch of the cryptocurrencies exchanges started to delist Terra's UST stablecoin, and the linked Luna token, essentially to kind of protect Luna from risk, all of the investors from risk. So like all together, all of the stable coins were when you add them together between Tether and USD coin and Luna, which was the fourth largest by market cap before it fell, they dropped by overall, the entire stablecoin market cap dropped by about 70% over the course of a week, because what happened is all of the kind of perceived as more risky stablecoins started to be sold as a reaction to the Luna coin entering freefall. So there's essentially people started heading for exits by burning Terra USD in exchange for Luna. And that meant that the supply of Luna kind of ballooned and the price plummeted, right? When the supply goes up, the price goes down. And which is exactly how we describe inflation. And so it was just kind of pushed off the seesaw. The creator of Terra USD and the Luna token has tried to restart it several times by doing what's called forking, which is essentially splitting the blockchain into two, by, coming up with all sorts of proposals from a technical side of how they could get Luna back. And today I just got to read this beautiful, beautiful article on Motley Fool that the title of was beautifully beautifully clickbaity. It said, "Why Terra, Luna, and UST coin are soaring today." And And the headline was that as of 3 p.m. today, Eastern time, Luna and UST were up 62% and 25% respectively. That being said, it was up 62%, but it was still only trading for slightly over a cent. So remember, this is supposed to be pegged at $1. So yes, up 62% when you've been trading at 0.0009%, 9 cents, is great. Essentially, Quan, who is the founder of the Terra, said that he is going to fork the blockchain and create a new chain, and then the chain would not include the UST stablecoin. And essentially, he said he's going to create new Luna coins, and it's going to distribute to developers, and get it to pre and post crash holders of Luna. There's a voting period going on in their DAO, which is essentially the contracts, their crypto contracts. Let's just call it. They're automated organizations that nobody really knows how they're going to work, but they allow you to vote on the blockchain and why I say nobody knows how they're going to work is because everybody has a bunch of different proposals for how DAOs are going to work. And it's kind of like watching anarchists try to reinvent the concept of consensus. Anyway, but with like more tech. So it is important to understand that what happened is once Terra crashed, we saw a bunch of the other stablecoins start to flee. So we saw other investors that were looking at stablecoins that they felt like either they were also algorithmic and there was a possibility they could fall off their peg. They started to redeem those so they could get out before they fell. However, two of the cryptocurrencies that essentially are the most reliable. So there's one called DAD and there's one called USD, which is very lovely and confusing because USD is also how you describe the fiat currency of the US dollar. But they have managed to hold their pegs of $1. And both of those have, like USD in particular, is considered to be one of the most stable of the currencies because they publish very independently audited reports of what they're actually holding as far as the assets they are holding in order to maintain their peg. However, we saw Tether, which is one of the largest stable coins, is starting to suffer corrections because Tether, one, got called out by the New York Attorney General for the fact that Tether is super secretive about what assets it holds to maintain its peg. And it won't tell you, saying that it's like it needs to be considered like they need to keep their secret sauce. However, the New York Attorney General essentially said you are acting as a deposit acting institution, and therefore you do need to declare this. And that, as soon as the market started to see that stable coins might not be so stable, they started to fly from the ones that had the least transparency about how they maintain their peg. Tether, despite being a huge cryptocurrency, is exactly one of the ones that started to see sell-offs. It didn't lose all of its value like Luna, but we are seeing sell-offs. Why is this important? Well, because not only are these theoretically stable coins are held up as this sort of safer way to diversify into crypto. What is important to understand is they are actually used predominantly as a way to trade cryptocurrencies with one another. So they facilitate exchanges because you're able to use them to exchange trades on cryptocurrencies exchange vis-a-vis one another. And that's because you need to have a value relative to something else, right? So if you have everything relative to the US dollar and you use a stable coin, you're able to use it as a transactional coin. And this is why there are knock-on effects from seeing just stable coins be turned away from being so stable. All right. I know this was a lot. Does anybody have any questions thus far about what happened with stablecoins before we get into kind of some of the other stuff happening in crypto? Eric says, I guess unlike the regulated stock market, they didn't stop trading when the free fall began in the stablecoin. Well, yeah, that's actually one of the reasons that Luna fell so fast is because it's an algorithmic stablecoin. So in fact, things will accelerate because the algorithm will continue to do things harder and faster when that happens. And a lot of the traders are actually people trading on an algorithm. So as soon as they see that they stand to make a buck by the value of Luna falling, and that they can burn them, then as soon as they see that, they start to pile on, and then that accelerates the free fall, right? Which we do see happen in other markets, right? Especially because of how much trading is these huge institutions. Like Vanguard is one of the largest traders, and they maintain all of these indexes where they buy and sell relative to the market as a whole, which means that when they make trades, it can make massive things happen in the market. So we see these in other markets as well. Kenneth says, Motley Fool, always on the pulse of the market. I mean, technically, right? Yes. Abel Jack says, summary, it all went kablooey. Correct. So why does that matter? Why should we care about this? If you're not holding onto a stable coin, why should you care about what is happening with cryptocurrency? Well, I think there's one thing to notice, which is that, like I said, it moves relative to the market, but at a faster rate, or at a more volatile rate. Crypto-based assets are very much a canary in the coal mine for what we are seeing in the markets as a whole. They are reacting to what is happening with things that have actual underlying value, like stocks, like equity that is based in a corporation. They are reacting to what is happening in debt markets as interest rates go up. So the canary in the coal mine of crypto is important not because this market cap represents a huge amount of assets, not because you know I don't know if we want to express sympathy for people that probably had too much money tied up in these things, because as they were always told, like, these are extremely risky. Theoretically, they got told that, but probably not. It is important to understand, because what happens with crypto is likely to be a portent of what is happening in the overall market. Are we going to see such rapid corrections? Are we going to see 99% of the value of the stock market lost? No, because there's fundamental values in equity. They're based in companies, right? So yeah. Eric says, algorithms fighting algorithms, only one will survive. That is a great summary of essentially what is happening. A lot of the very hyper fast trading markets, crypto being one of them, but we also see this with just the type of day trading that you see with hyper fast markets in general. You can really see market accelerations happen with them. We also can see cliffs happening in the market right now because of the way that how much do I want to explain options right now? We're not going to explain options right now. I wanted to talk about kind of the cliffs of calls and puts and on the market right now, but I think we should not do that because it's too complicated to explain calls and puts right now. So another thing that we need to talk about with crypto is that it's really regulators are starting to take note. So, one of the Arthur Hayes, who ran the BitMEX exchange, got sentenced to massive amounts of fines, as well as 6 months of home detention for failing to implement anti-money laundering transactions. They said overall they found like 600 instances where he failed to implement suspicious transaction reports. Additionally, we're seeing the same thing happen in Switzerland. So Switzerland, which has long been a huge player in the financial markets, as you've probably heard from the term Swiss bank accounts, Switzerland is a huge player in the cryptocurrency markets because of the amount of interest in untrackable financial assets in Switzerland. And Switzerland just started investigations into money laundering from one of the kind of darlings of the cryptocurrency world, who was a Iraq refugee who had come and made a lot of money in Bitcoin, and claimed that, he was going to start an educational program to help people with Bitcoin, but essentially has been, the Swiss government is now looking into him for money laundering and failing to file the correct reports. I think what is important to understand, though, and what is probably reassuring for the crypto universe, is that the flight that we are seeing from crypto assets, yes, we're seeing corrections. We're seeing big coins like Bitcoin or whatever lose their value. We're seeing certain stable coins be completely destroyed. But the flight from stable coins has not been entirely indiscriminate. Like, we are seeing that exactly what markets are supposed to do, which is that they are being suspicious of bad, poorly maintained, lack of transparency stable coins, and they are staying in the ones that do have highly audited financial reports, that do act more like depository institutions. I think there's a lot to look at before the United States implemented essentially national banking services. Like, we can really look at the acts of free banking and freewheeling in both the United States before we implemented a lot of this, and when we look at the Scottish free banking era. I think there's a lot of reasons to look at what is happening in cryptocurrency as sort of the era right before we got regulations. And I think that is important to, I think it is important to understand that there is a lot of value in what we are seeing, which is just like in the eras of bank runs and, suffering corrections from free banking eras. The exact same thing happened where we saw people leave bad banks and go to good banks. And as much as consolidation in the banking industry isn't necessarily good, I gotta say, having a ton of tiny banks was very inefficient and led to tons of fraud. So, before we implemented a national currency in the United States, all these banks would have their own kind of banknote instruments, and there would be massive amounts of fraud from banks, because if you had to go back to the issuer in order to exchange it for gold or silver or whatever, let's say you were in California and you have a banknote issued by a bank in upstate New York. You are not going to be able to see if they actually have as much gold in their reserves as they have. You have to physically go to that bank in order to redeem it. Most of them don't get redeemed, and that is where a lot of the fraud happened. And that kind of same thing is happening with cryptocurrencies and NFTs and other crypto-backed assets, is we're essentially seeing these sketchy ones have markets move away from them. So Eric says, yup, regulation, man. Sooner or later, the Wildcat Frontier days will come to an end. I do think that I think that is very important. I also oh my God, there's so many people that hold up cryptocurrency as this beautiful, anonymous way to exchange money. But the irony of the entire thing is it's probably one of the least anonymous ways to exchange money in so many ways, because everything is on a publicly recorded blockchain. So, there's plenty of ways to trace things. What is the best currency? Cash paper currency is the best currency if you want anonymity, which is why it has been the love of fraudsters and the love of, people working in black markets like drug dealers for a really long time, because cash is in fact the most anonymous and untrackable currency. And crypto is not that way. Ablejack says algorithms not so different from indexing, robo advisors, and auto sell orders. Yes, it's 100% correct. I think it is important to understand like how much we see market acceleration from those things. Abel Jack says, "Oh my gosh, yes, we use blockchain to catch bad people all the time." I know, and it's like, there was a really interesting report in The Economist this week that actually showed that African Americans are more likely to hold crypto than white Americans. It's like 21% of African Americans indicate that they hold some sort of crypto. And in particular, African Americans were more likely to think that cryptocurrency was regulated, but that it was a way to avoid suspicious regulation. And I think what is important, like, as you can see, if you get in a fight with Twitter bots or paid shills for crypto on the internet, is that people will claim that cryptocurrency is extremely well regulated because they have to follow all of the know your customer rules, which know your customer rules, which are anti-money laundering obligations, are not at all the same as regulation. Regulation is when you say you have reserve requirements. Regulations are when they have accounts with the depository corporation, which is one of the proposals about how they would treat stablecoins, actually, which is essentially allowing them to borrow from the Federal Reserve Bank, but then they have to hold accounts with reserve currency. So anyway, I think it's important for people to understand that anti-money laundering is not the same as regulation for the markets itself, and you can be tracked just as much or possibly even more when it comes to blockchain. Cash fiat currency is king. That's what the US government uses in all of its dealings. Defense Department being one example. By the pallet load. Yep. Well, it also helps if you're connected to the people who print it, right? So I feel like I've ranted for a long time. How long? Oh my god, I've gone for an hour, y'all. I haven't eaten the donut yet. Is it time to let's eat the donut. And if you have any questions about what is kind of happening, because I've obviously only skimmed the surface, but I think it's important to be following what is happening with cryptocurrency as much as it's important to kind of be vaguely aware of what's happening with any derivatives, because how many of us got caught unawares by the financial crash and the financial crisis in 2008 because we were not following the large-scale derivative markets of mortgage-backed securities, which who could blame you? But guess what? If you're following cryptocurrencies and the corrections in the cryptocurrency markets, you might be better prepared to see what is happening in the overall markets because there is a reaction to that. All right, let's go for the donut cam now. Well, maybe. There's so many things here. There we go. All right, here's the donut. It is a pineapple guava fritter, so it is like a guava on the top, and then it's got like bits of pineapple in it. It's very big. This is gonna be very hard to eat, not messily, because it's so big and it's like covered on icing on the top. This is hefty. I swear this is like half a pound of a donut. Oh, I see we're gambling now for the donut. A donut rating pool. It's on theme with the crypto to be doing some gambling today. Yeah, let's find out what people think it is. I'm still going for it. I'm gonna say it's very dense. It's like more bready on the inside than I thought it would be. I still haven't gotten to a piece of the pineapple yet, though. Kit's doing the shilling for me. Y'all, we got 27 watchers, but only 13 likes. Click that thumbs up for Anomaly. Thanks, Kit. I appreciate it. Y'all, I'm still trying to find this pineapple piece. Okay, the guava topping is great, but I still don't have any pieces of pineapple, which is kind of defeating the point of a fritter. There we go. I got a piece. Eric says, gotta feed the YouTube algorithms. Although today might be the day I don't want to feed the YouTube algorithms. I guess the good news is that Elon Musk is talking right now, so it seems like I don't know if Aaron has been killing bots, but I haven't seen any bots, so that's good. Newbold1 thinks it's going to be a 3.5, as does Eric. I'm trying. There's like a really good piece of pineapple right there. Y'all, I think it's even lower than that. It's like, it's interesting. It's good. I'll finish it, but it's not. I had higher expectations for this. I think it's a 3. Yeah, I think it's a 3. The pineapple is good, but I could have just eaten a pineapple. I would have gotten more pineapple. How many bites to get to the pineapple center? All the pineapple was like on one side. It wasn't even in the center. It's like all on one side of it. All right, y'all. While I eat this, does anybody have any crypto-related questions or finance-related questions? The week's been crazy. I can't even, like, wheat, baby formula, war in Ukraine. What other things are happening? Oil, retail profits, all NASDAQ losing all its value. David says, I splurged because of the donuts and had a Greek yogurt pop. That sounds good. How is your cleaning going? You're cleaning under the sink, is that right? Eric says, I had hopes on the pineapple tipping the balance. There's just not enough pineapple in it, I think. Eric says, I've heard rumblings about fertilizer in food production related worries. Yeah, well, my friend who's a farmer, small-time farmer, she was warning everybody back in, like, the early fall. She was like, y'all, food is going to go up so much. All the cost of my inputs have gone up. So she was just experiencing, like, inflation before the war in Ukraine, which obviously drove oil prices quite a bit higher because of everything happening with Russia right now, and them being one of the major exporters of oil. Oil is a major component of fertilizer as well as agriculture in general. So that's part of the reason, but then there's also just the regular inflation. Kit asks, generally speaking, what are you doing with your own portfolio considering market behavior? Thanks for that delightful question. That's so easy for me to answer. Nothing. I'm a big fan of, one, I subscribe to efficient market theory, which is that it is impossible to distinguish beating the market, the difference between luck and skill, and that efficient market, best thing you can do is invest in a whole. So I'm very much an index fund investor, and I am a big fan of dollar cost averaging, which essentially means a regular rate. The same rate invested regularly means that when the market is down, I'm able to buy lower priced shares, bringing down the price of my shares overall, which means that I make more money in the long run. So continuing to invest as usual, dollar cost averaging, buying things while they're low, hoping to sell while they're high. I'm invested for the long term, so I'm not I'm not invested for anything where I need to get it out in the next, 10 years, 20 years. So, yep, dollar cost averaging, as I have been doing, which has, I just gotta say, hasn't been great when the markets have been up. Haven't been buying a lot of shares, putting the money in. It's nice for the overall value in my net worth, but when it comes to the amount of shares I'm getting, Kenneth says, how much crypto exposure do you think the average index funds have? Most index funds have almost no crypto exposure, so to speak, because index funds are generally just composed of the index of publicly traded markets. There are not many publicly traded cryptocurrencies, and therefore their exposure is extremely limited. When you're talking about the actual institutions that do overall investing in the markets, what is their exposure? Most of them are smart enough to not be overly invested when it comes to institutional investors. Just because there are high volume of the trading of cryptocurrency doesn't mean that the trading of cryptocurrency makes up the high volume of their overall trades. And I know, so I'm not worried about that. David says, I just have to stop letting my brother talk me into buying stock. He's very convincing, and then I end up buying shares in drive-through safaris. I honestly thought it would be a pandemic moneymaker. I mean, it kind of does sound like a pandemic moneymaker. I saw someone who did their graduation in Amsterdam was going to a drive-through safari. But yeah, I'm not an individual stock picker, except occasionally with my fund money. I'm an index efficient market theory all the way. New Bold 1, do you think that there will be a brain drain from the more traditional markets as folks head to the wild frontier? Absolutely not. One, I think that the idea that there's some brilliance involved in the finance markets is giving way too much credit overall to the majority of the people involved in trading. And I say this as someone who just passed the exam for that. No, I do not think that. I think that overall the individuals involved in the financial markets tend to be very unimportant to the way that the markets move overall. And so I'm not worried about it. The company is Parks America, and apparently they are they a drive-through safari conglomerate? I was at one in Florida. It's really annoying when a rhino blocks your car for 20 minutes. I mean, you came to see the rhino. Why are you complaining? That sounds like a thing that would be like hashtag African problems. It's like a rhino blocking your car for... This is, yeah. Oh well, I was supposed to go on a real safari in January, but the whole pandemic just kept happening, so I was not able to go to Kenya. Although we did actually do an Arctic safari, technically, because we went and got to meet a bunch of reindeer, which I would emphasize, I still was not actually totally convinced that reindeer were real animals. I thought that they were part of the overall myth related to Christmas that we sell children, and didn't realize they're real animals, and in fact the way that the indigenous people of Northern Europe get around. David asked me if I'd like to visit Pine Mountain, Georgia to visit a drive-through safari. Not particularly. I feel like if I was in that part of Georgia already, I might be mildly interested in it. But no. But it is an interesting concept. New Bold One says, you say that, but on my one safari park visit, a wildebeest ate my dad's Mars bar, and then we had to be rescued from the monkey enclosure. Y'all, this is sounding very sketchy. When I was in Australia, we went to like a nature reserve or something, but you gotta like just like hang out with the kangaroos. I mean, I know kangaroos are all over Australia, but they're just a bunch of bored kangaroos being pursued by tourists trying to feed them. But they let us like hang out with a koala and pet a koala and like hold a koala, and it really was one of those things where I was like, I feel like this in 20 years we're going to look back and be like, yeah, we probably shouldn't have been letting people hold koalas. And it's going to be one of those things we look back and we go, that probably wasn't like the best. Also, like, in China, the way that like zoos work does not meet my American standards of what I expect a zoo to be like. And so like the Great Wall of China just has like a bear in the hot sun, like just like in a pit. And there's just like a bear hanging out and it's just depressing. And it just feels like the bear should not be there at the Great Wall of China. Didn't seem like its natural habitat, and definitely not in a weird cage just on the side, like in a pit. So, Eric says koala pox. Well, yeah, koalas have chlamydia. They all have chlamydia, right? So you can catch chlamydia from koalas, which is, I guess, a concern that people have. David says, I thought seeing all the vegans around that my Tofuti stock would soar, but clearly trend spotting is not the right move. I'm just I'm in the belief that fundamental analysis is not as efficient as just letting the markets do what the markets do. But I am no Warren Buffett. True, strong, efficient market theory says that Warren Buffett shouldn't exist, but anyway. Fundamental analysis works for some people. I am not particularly invested in it. One thing to say about seeing all the vegans around you is that meant that all of the companies that dominate the grocery markets and the retail food markets for packaged food also see the trend of vegans. And as a vegan, I have benefited from this in that there are so many major companies like Procter & Gamble and General Mills that now have vegan, like, fake meats and dairy and everything. So it used to be that there were so few options, especially in a traditional grocery store, and now everyone has their own vegan cheese and types of vegan cheese in all of these, like, main markets. It's not even hard to find, like, vegan cheese shreds in, like, a Southern A&P anymore. Would have been inconceivable 10 years ago. You gotta factor in the competition. So, David says, can you eat a Tofuti cutie on air? Maybe that'll help the stock. I don't think that is going to be a market mover. But, they do say that influencers have a big impact. So, maybe all, 100 views that my average live stream gets, everybody's going to be like, yes, let's have a Tofuti cutie. Gosh, I haven't had a Tofuti cutie in years. I used to have a friend that had these things called nuclear taco parties, where he made these tacos that were so hot that it was essentially just an act of collectively crying and screaming and pounding your feet on the ground, and it was kind of miserable. But it was also very fun because it was like a collective bonding experience. And as someone who is particularly sophisticated in the skills of eating hot food, I enjoyed getting to show off my prowess in this environment. It's kind of like how I'm good at figure skating, but I have almost no opportunities to show it off. Same. I eat habaneros for breakfast every morning, but I don't get a lot of opportunity to show off how good I am at eating hot food. And the nuclear taco parties, while being kind of miserable and extra miserable the next day, he had some sort of like synthesized ghost pepper spice that he put on it. Anyway, the antidote at the parties for the vegans would be Tofutti Cuties. That was my long discussion there. Rural says, I have never seen vegan cheese. Not so sure about your southern A&P. Well, you do live fairly rurally, but I have seen them in southern A&Ps, but in larger cities, so maybe that's the difference. Rural says, can't get it here, David. I guess Tofutti is a brand. Yeah, Tofutti is a brand, but I actually think that they got bought by Procter & Gamble. Am I wrong? I don't know. Are they still their own company? They are still their own company. I cannot believe they haven't gotten bought up yet. I am surprised. Interesting. I know Daya got bought, which is another vegan cheese brand. Tofutti is indeed a brand. If they did, then I wouldn't have their stock. It's true. I'm so surprised that they didn't get bought. Eric says, Tofutti Cutie is a ghost pepper antidote. Proof there's always a secondary market for any product. Yes, true. Tofuttis are a derivative of ghost pepper. Ghost pepper tacos, I guess. All right, y'all. I guess we're now into Tofuttis. And we're now into Tofuttis and I feel like that's probably a sign that we've moved past the stablecoin crypto part of the hour. We ate the donut. Fuzz Bubbles says, further discussion topic, what does a hostile takeover mean? How can a company be forced to sell? This is a great topic, but like we would be here for 2 more hours if I discussed it. I actually would really love to have K Mike EM, who has been on, I think, 2 live streams now. He is my friend who's a publicly traded person, kmikeem.com, I believe. You can buy stock in him and then vote on his life decisions as a shareholder in him. But K Mike EM would be a great guest to have in, and we can talk about what hostile takeover means, because I think it is a very, very fascinating concept. And there's some cool history behind it as far as law firms and what happened in the 1980s in the Wild West. So I think that would be very great. Cheryl says that Fuzzbubble says future discussion topic. Yeah, I was thinking further. But yes, that is a great idea for another one. Thanks. David says, sounds like a sci-fi novel, hostile takeover a publicly traded individual. Interestingly enough, there was a show that was, the premise is very hard to explain. But all you really needed to know was that it was a legal drama, but it involved like guardian angels and stuff, and we'll move on from that. But in it, they would do like, it was like a legal kind of comedy drama, and they would do essentially like a case of the week was kind of their format. So if you have Monster of the Week in a typical sci-fi show, in like Alien of the Week in Star Trek, then you would have like a case of the week in this law show. And they did one based on a publicly traded individual at one point without like asking K Mike EM, the world's first publicly traded person, for his rights or anything. They clearly just like read an article about him and got inspired in the writer's room. But they did a whole episode that was a hostile takeover of a publicly traded individual. Which I wouldn't necessarily describe that as a sci-fi show, but considering the premise of the show was that she died and came back, traded bodies, and had a guardian angel, it was kind of sci-fi depending on how you interpret things. God, what was it called? Was it called Drop Dead Legal? I feel like. Show. Hold on. called Drop Dead Diva. That was the name of the show. And it sounds like an absolutely ridiculous premise, and it sounds like it's going to be super fat phobic because essentially it is a model being reincarnated in a not skinny lawyer's body. And yes, the premise is ridiculous. However, it was a pretty good legal show. It did some interesting concepts. The writing was decent, and it wasn't nearly as fat phobic as it sounds like it's going to be. In fact, it was like a pretty great body acceptance thing. I didn't like this kind of portrayal as the idea that it seemed like they really like to portray like models as not smart. But anyway, it's very fascinating. And for a show that had a guardian angel on it, surprisingly based in actual legal cases. All right. Kid says, taking off. Cheerio. I think we are probably done. Cheryl says, the publicly traded person also writes, so maybe he writes about his own hostile takeover. Interesting. I think he is trying to shop a memoir around right now. So Google says there's a reboot in the works for Drop Dead Diva. That's because there's no new ideas. Black Mirror could do something with that idea. Yeah, interesting. Well, yep. K Mike EM does actually, his girlfriend is a writer for television. So I think the possibility that at some point a K Mike EM hostile takeover TV show happens is within the realm of possibility. All right, y'all. I feel like we have covered a lot of things. Congratulations. We made it through talking about crypto on the internet, and the chat did not turn into a shit show. Hopefully that you found this helpful and interesting, and it explained a little bit of what is happening and a little bit of why you should care, but don't care too much. And New Bold One says, thank you for this. It's been super interesting. Thank you. Well, also, to let you all know, I will not be on live at the same time next week. I will be on sometime on Sunday, but it'll likely be earlier in the day. So keep an eye out if you're not subscribed. Subscribe in order to get notified. And if you are part of the text crew, you will get notified before I go live, as will the Personal Finance Society on Patreon. So you can subscribe for SMS alerts, and I will let you know when I'm going live. I'm actually going to go see Stars on Ice next week, and will not be available at my normal live stream time. So, all right. Cheers, y'all. Have a lovely night. Stay safe, stay hydrated, pet a cat if you have one available, and I'll see you next week.